Kansas City. My name is Charise King, your host for the Real Estate Junction, brought to you by Curls Joseph Property Group. Today our topic for the Real Estate Junction is going to be foreclosures, a dream deferred. Our guest today will be Jeff Williams with Missouri Legal Aid. To own a home is one of the greatest things that people want to do. It's a big American dream to own a home. Fortunately, in 2012 and 2013, there was major foreclosures. And we're going to talk with Jeff today about the foreclosure and how it's impacting the urban core and this inner city. Jeff, thank you for coming.
Thank you.
Appreciate
it's good
that.
to be here.
Thank you. Well, we see that in there were over 2.3 million foreclosures in 2012 and a slight decline in 2013. Urban areas in the houses were mostly impacted by minorities proportionally. And we want to know, what could you see that would impacted that? What may have caused the impact of the urban core and the inner city being impacted?
Well, we've had kind of a couple of waves of foreclosures over the past 10 years. Starting in the mid-1990s through the onset of the recession in 2008, we had new types of mortgage products out there called subprime mortgage products. And these products were heavily marketed toward communities of color and low income communities, particularly urban communities. Mm-hmm. And these mortgages featured things like high fees for origination, mm-hmm. All kinds of other fees for like mortgage, life insurance, things that added a lot to the cost. And also frequently people could have afforded lower cost mortgages about 20% of the time, but they weren't afforded the opportunity because of the traditionally lacking lending environment in the inner city communities. People naturally flocked to these folks because they were so aggressive about lending. They would come to the doors of inner city homeowners and so forth, saying, don't worry about any changes with banks, I can help that with you. And frequently they would find out after the closing that their payments and fees mm-hmm. were much higher than they thought. And so there was a huge wave of foreclosures then, which have created a lot of vacant properties in the inner core. And secondly, since the onset of the recession, we've just had a lot of folks have lost their jobs.
Yeah, that is definitely true.
And so about the time that the subprime foreclosures had kind of phased, hit their peak, the lack of employment came along in the service sectors of the economy. So it's really been a 1-2 punch for these communities. And the city certainly has, under this federal program called the Neighborhood Stabilization, where they try mm-hmm. to address the number of foreclosures and the number of vacant properties, inner city communities have definitely been impacted the most heavily. And steps that people can take are when they become, when they fall behind, there are federal programs available to assist them in trying to make the transition. One thing they can do is call the Central Office of Legal Aid and ask for HUD housing counseling for foreclosure prevention. That number is area code 816-474-6750. And we have attorneys there who can assist them with that. The other place I would recommend them that they contact is Neighborhood Housing Services. Mm-hmm. They have several financial counselors there. They're nonprofit. They've been in business for about 40 years. There's no charge for their fees, unlike some of these nonprofit foreclosure prevention companies and programs you see promoted on over the air that frequently take you down a path that's expensive and frustrating. Neighborhood Housing Services is located at 5835 Truce Avenue, just adjacent to many of the low-income communities. I unfortunately don't have the phone number, but they are in the book.
Yes.
and they're very good. I would recommend that folks call contact either Latrice Stewart or Marjorie Majors there.
Yes.
They both have for many years worked with folks to try to get them into more feasible payment arrangements.
Okay, well that's great. That's a lot of information that you've given. You cover a lot of questions I've already had. So when a person does get affected by foreclosure, after their foreclosure, what do you feel is their recourse to get back on their feet as far as credit?
Well, I believe that they should go. There's a new agency in town called the Prosperity Center. It's located at 51st and Troost, and they have folks who are very attuned, just like Marjorie and Latrice are, but that probably have a broader array of services there for folks trying to rebuild their credit and budgeting. You know, many young people in this economy are not really used to working with a budget.
No.
And many of the young people have not been banked. And in the urban centers where banking services have not been available, and you've got things like check cashing places, people are unbanked. And so the idea of building their credit and building a monthly budget is new to them. And I think the folks at the Prosperity Center can assist with that, as the folks at Neighborhood Housing Services can. But that's what's got to happen, is you've got to kind of work out a monthly budget, talk to your creditors, and get some financial counseling, free if you can. It's probably the best kind of type that advertise, are generally ones you need to probably get some legal advice on before you get involved in.
Okay. When you say, for those who are watching the program and you say unbanked, they may not be familiar with that term. Or when you say unbanked, exactly what do you mean by unbanked? I
mean folks that traditionally don't have a traditional checking or savings account. Okay. They don't. They rely pretty much on money orders and check cashing businesses. They don't go to a traditional bank where you deposit money that's insured by the federal government. Okay. You know, so and there are many folks in these urban communities that do not have that. Particularly the younger folks do not have that kind of relationship, because frankly, those institutions haven't served those communities terribly well.
That's definitely true. Another question to piggyback off of what you're saying, being unbanked, when a person does go through foreclosure, I hear, with me also being in the real estate industry with Carlos Joseph, people will say, "Oh, I'll just walk away." They don't understand when you do a foreclosure, basically you never walk away, because there's going to be an issue on your credit. You may walk away physically and maybe emotionally, but you're going to impact your credit. How does that play? Mostly on jobs today, people want to look at your credit. Sometimes if you're insurance, or if you're in securities or any type of job, or any job these days at all, they're looking at your credit as opposed to not looking at the credit as it impacts in the past as far as getting a job. What would you say that foreclosure, how that impacts maybe getting insurance, getting a car, getting a job? How would you say that impacts?
Credit is a factor. I used to be on an advisory panel to the National Association of Insurance Commissioners, and one of the controversial things was the whole use of credit rating as a means to price insurance, and that is out there, and it's been found to pass muster because it seems to have some predictive value. So if you've got credit issues, you need to work on them. You know, contact your creditors. Negotiate with them, see if you can negotiate some sort of arrangement with them to reflect improvement in your credit standing, and begin to build better credit. It kind of depends on where you're at in the process, but yeah, just walking away from it is probably not the best idea. In some cases, lenders may try to pursue deficiency judgments against you. That you may have had a $70,000 on a mortgage on a house that sold for $40,000, and they may assign that to some other company and that tries to collect it. And so you should seek counseling from legal aid or neighborhood housing services or the Prosperity Center and try to come up with a plan to engage these creditors and get them to either work with you or to remove these negative credit references.
Right, that's true. Because I know that, and I'm sure you know since you work with Missouri Western Legal Aid, Missouri is a trustee state and Kansas is a judicial state, so that they need people who are in both states. Since we are a two-state area, people need to know the difference of what the effects would be, and that's one reason why they would hire someone that would legal aid or have credit housing situation to help them get the understanding, because again, you're not just walking away from a foreclosure. And with that being said, because there's foreclosures, there's so many, how do you feel like with the statistics that you may know of, the study you know from doing the things with legal aid, impacting the urban core as far as vacant properties and vacant properties as opposed to people living in the neighborhood? You got 5 or 6 vacant properties in your neighborhood and you're trying to sell your home, but you got foreclosures that are going against you.
There is no question, national studies show that the closer you are to foreclosed properties, the number of foreclosed properties you have within 1,000 feet of your house can reduce the value of your home by multiple thousands of dollars. There's also no question in the communities we work in that the subprime lending area was a catastrophe for these neighborhoods. Many of the neighborhoods I work in, one particular neighborhood in Midtown, one local nonprofit had probably rehabilitated more than 100 homes in that neighborhood in the 1990s. Property values and crime was stabilizing, but when the subprime foreclosure started kicking in, vacancies started to take over the neighborhood. It accelerated the rate of neighborhood change. Property values declined, vandalism increased, and as did speculation. And we're now trying to sort of put back together a viable residential neighborhood where there had been some promise maybe a decade ago. So we've got some real challenges in the inner city because of the lending crisis and foreclosure crisis we had.
Yes, definitely. And just to piggyback off that again, I know people also need to know sometimes when they're in that part where they're in deficiency, there's other options besides the foreclosure. They could do loan modification, loan modification or forbearance, and sometimes if that's not even optional, and they don't get approved for that, they can also do short sales, which would be a little bit more soft impact as opposed to a foreclosure. Yeah,
all those workouts, short sales, the federal, I believe it's called the HAP program.
The HAPA program, where your person would get some moving assistance to move when you do a short sale. But they also sometimes when you do a foreclosure, they have the I can't think of it, the money for when they foreclose.
Cash for keys.
Yes, cash for keys.
All of those are good and should be looked at.
Yes.
And if you're a renter, you know, there was a lot of investor mortgages during this time. If you find out that the person who owned your property has walked away from it, your landlord, you are entitled under federal law to remain in that home for the duration of the lease that you have. There was a law enacted in the wake of the subprime meltdown, and just because the house changes hands through foreclosure, renters need to know that they're protected and they don't have to move overnight.
Right, exactly.
They're protected for the balance of their lease, and I believe up to and there's a minimum time, I believe, of 3 months.
Right. Well, Jeff, you know what, you have valuable and a plethora of knowledge, and we thank you for your time for coming. We appreciate that. Thank you so much again. Again, he's with Missouri Western Legal Aid.
Legal Aid of Western Missouri.
Thank you for that correction. My name is Charise King, and I'm your host with the Real Estate Junction. In the words of Langston Hughes, a dream that is deferred is a dream that either is expired or explode. And by the words of Fred Carroll's, make it happen.